Hi, my name's Mark Burgess and I'm from Protiviti. I'm here with my colleague today, Phil Doran, and we're here to talk about the Royal Commission into Financial Services. The Banking Executive Accountability Regime comes into effect, Phil, on the 1st of July.
Indeed.
It focuses on directors and the executive levels. What does that mean in practice?
Well, it's been a really fascinating implementation around the BEAR. So we've definitely seen organisations understand some of the shortcomings in their processes and in their reporting. So there's been a significant uplift to make sure that the BEAR is actually functioning. So the executives are really clear on exactly who reports to them, what they report, what good looks like, where there's challenges, in order that they can actually sign to the accountabilities that they're signing up to. In the Royal Commission, Justice Hayne has recommended that BEAR is extended beyond banking. So at the moment it only applies to banks. So he's saying every financial institution should have an equivalent of BEAR.
And why will that be important?
Well, it brings back the whole concept of accountability of the organisation to its customers. Not only that, accountability to everything the organisation does. So all of its processes, all of its systems. There needs to be a really clear single point of accountability. And a lot of the themes around the Royal Commission were that there wasn't necessarily a single point of accountability. You saw a lot of executives passing blame to previous executives or to underlings. That disappears with BEAR to some extent. It's never going to be a perfect world, but certainly the huge benefit of BEAR is there's a single person who's an executive level person that's absolutely accountable for what is stated in their accountability statement.
And with that greater responsibility of specific tasks and activities, what are the consequences if they get it wrong?
For CEOs, it's up to 60% of their variable remuneration, so they could lose 60% of their bonus.
Yeah.
So clearly they've got a vested interest to keep their accountabilities really clear and achieve those. In addition to that, they defer their salary as well, or a portion of their variable salary. So they have to wait 5 years before they get their bonus.
And clearly they're incentivised to do the right things. What do they need to do in terms of reasonable steps?
So reasonable steps is a specific concept, which is really to make sure that if anything goes wrong, to make sure that they take the steps to make sure it's fixed.
Yeah.
And again, there's this concept throughout the Royal Commission that organisations just continued to delay and defer when they knew there was a problem for years in some instances. That can no longer exist under the BEAR regime.
So the BEAR regime will introduce very specific accountability to individuals for the way that they behave, the way they act, and they'll be judged on the reasonable steps that they take around key decisions or the lack of making key decisions.
Absolutely. And if they don't show those reasonable steps, then they lose their bonus.
Through the work that we've been doing with our clients at the moment, where the banks need to be compliant with BEAR by 1 July this year, what are the learnings that we can share with those financial services institutions that are likely to adopt BEAR-like principles in the future?
Well, Mark, the reality is that a lot of the BEAR requirements could actually be implemented, and some of them already are. So things like deferred remuneration, clear accountability statements. We've seen with working with our organisations actually quite a lot of disconnect, even between job descriptions versus what their actual job is. So the BEAR is hugely beneficial in clarifying all of that, holding each other to account, making sure it's clear what the directors are responsible for, what the executive is responsible for. And therefore, there's quite often an uplift in processes, a clarity around what the value chain of the organisation is, where you make your profits, how the processes work, what the reporting is. There's no reason that organisations shouldn't be focused on that now. And the Royal Commission has been really clear in some of the shortages in that.
Commissioner Hayne has challenged the way remuneration structures works and who is benefiting from those. What are the headwinds you're seeing, Phil, that the industry needs to take care of?
Mike, I think it's already happening. The reality was with the vertically integrated models, so when a bank owns life insurance business, a wealth business, a superannuation business, naturally they were going to sell the products from head office. So it wasn't acting in the customer's best interests, regardless of, and they were driven very much by whatever product sold the highest commission, regardless of what that customer actually wanted. So one of the thematics around the whole Royal Commission is acting in the customer's best interests and acting with due skill, and that's not selling the product that gives you the biggest commission. One of the recommendations in the Royal Commission is also an annual review around remuneration and commissions to making sure that you are actually fulfilling those requirements. So there's two aspects to it. One is that there's already a driver away from the integrated model, so banks are just becoming banks now. They don't have all the other services. And also there is the genuine independent broker model that is acting in the customer's best interest by selling them the right product.